which is the yellow, okay, has rallied about 12% since it bottomed on November 12th, okay? Got that? While the GDX has rallied 84% in the same period. The GDX actually bottomed in October and then hit a higher low in November. Okay, this is a higher there and then here, okay, which indicates that there are more buyers. They're eager and fewer sellers of the gold and this gold chart. This is a chart of what we call relative strength. This is the relative strength between the two, okay? I know, I got to deal with all these terms. That means that one asset pitted against another is showing which is stronger. The overpowering strength of gold versus the broader stock index is attracting trend followers, all those managers who like gold because of the action. This is what they're looking at. It's what they like. Now, Agnico Eagle, okay, this one has been my go-to stock for a long time in the gold group, okay? This is Agnico Eagle, AEM. Now, it's up a whopping 83% since the last time we spoke to the CEO on October 3rd. By the way, that was the bottom when he came on. And according to the technicians, this is a great chart. This is it. I mean, like, to me, this isn't the Mona Lisa. It's a little more like the Jackson Pollock. I mean, it's a little Jackson Pollock, maybe, or Barnett Newman. I mean, I don't know. But after AEM hit its 200-day moving average, a longer-term piece of technical terminology, meaning how closely it's hugged this path, okay, this is a 200-day path, and not meander too far beneath it, the stock did not roll over. Instead, it went up. That's a consolidation move, another techie term, meaning sellers took profits, but there was also new buying that sent the stock higher. Again, that's a bullish tea leaf, if not an entrail. Remember, volume matters to them, and not me. And lots of volume is seen as a confirmation of the direction of the play. Then last week, AEM broke out from a tight trading range on a high-volume rally. Again, another sign that there are lots of eager buyers. If you just went by the technicals, then Agnico Eagle would be a buy on any pullback, and then unless it fell to 44, okay? That's more than 9 points below the current price. And then, of course, it would be a sell. And that's why, as someone who follows the fundamentals, I really can't see a case for buying Agnico Eagle or another gold name at these levels. While it's definitely my favorite gold company, given its low cost of production and the fact that its mines are in geographically safe places and that it's doubling its production, I like the CEO, I still believe you should be ringing the register. I think you should be taking profits. And not just in AEM, but in the whole Pin Action Gold Group. I mean, look, we're up 83% from when he spoke. I mean, I don't know. I think the action tells you nothing about the future. You need a fundamental reason to buy, one that has to do with the underlying business, because if the action turns bad and you're just following the charts, you will panic and sell. Sell, sell, sell. But we need to do the opposite of that. Plus, I mean, come on, we made so much money. Bulls make money, bears make money, hogs get slaughtered. This is a stock that's doubled in a little more than 2 months. I mean, come on. If the only reason you have to buy something after this kind of move is that you like the action, you don't got enough action. You don't got enough mojo. There you go. There's a term. There's a fundamental term. Mojo. All right. So what would be the fundamental case for gold and Agnico Eagle? Gold works as a hedge against two things: chaos and inflation. And you only need one of the two for gold to work. Right now, I am far more worried about deflation than I am about inflation. Deflation, as every other asset other than gold is losing its value. I mean, look at oil today. That's what's happening in severe recession. That always happens, and it's happening again as corporations and individuals who borrow money for just about everything are fire-selling these assets. That's the root cause of deflation. So to buy Agnico Eagle or any other gold name, you either have to believe that I am dead wrong about deflation or that the chaos from global financial crisis isn't going to get better. But what happens if it does? What happens if it gets a little less chaotic? I'll tell you what'll happen. You would have bought high. You would have bought high and sold low. And people will hate me even more than they do already, even more than I hate myself. And that's saying something. I can see buying Agnico Eagle or our favorite gold stock as insurance against economic turmoil. What I can't see is buying it right here, right now, because I am deathly afraid it is too high. You'll be buying too high, even as today the stock was down $2.50. I think if you pay up here, you will get picked off. What you have to say to yourself is this. This is what I always learn to do. Okay, hey, I missed it. I missed it. I missed this play. You do not want to chase this kind of momentum. Every time gold has been red hot, we have been Icarus to the sun. And I think Icarus is in the house again. The technicals don't tell you when to get out. They don't help you not to be greedy. They don't. I think if you still haven't sold Agnico Eagle, you've already been greedy. For heaven's sake, the stock is trading at 79 times earnings. So what would I do? take a pass. I don't like the risk reward here. If Agnico Eagle falls below $44, the level where the chartist would abandon it, then I think you might have that opportunity. That's the viable pullback. There's enough chaos in the world to justify pulling the trigger under 44. This is a case where we want to do the polar opposite of what the technicals say. Sell here, buy when it falls below 44. We respect the fact that the big money guys are following the action, and the action says gold is hot. But the action tells us nothing about the future. And the fundamentals tell us that Agnico Eagle and the other gold names are simply too expensive at these levels, given the deflation and a possible end to the chaos within the next 6 months, courtesy of the stimulus package and the bottom in housing. Here's the bottom line. There's too much room for downside here. Gold is just too hot for us. It's scorching. And while some like it hot, nobody's perfect. We don't want to get burned or worse, self-immolate. Just because we were chasing a stock we should have taken a pass on. In short, we'll get another chance. The points where these chartists want you to buy are too hard fought, too dangerous for this guy. And they should be too risky for you, too. In other words, I just don't like the risk reward here. And no chart is going to change my thinking on that bet. Let's go to Vince in Ohio. Vince!
Hi, Jim. A big Ohio State Buckeye booyah to you.
Still waiting for the big invite. Can't get that invite. I love the stars in the helmet there. It's just so great. What's up?
Maybe next year.
Thank you.
I wanted to know what your thoughts were regarding Peter Schiff's claims that if we continue to print money at billions at a time, Jim, that our dollar won't be worth the paper it's written on.
I think that
personally, the fact that gold will then climb to $3,000, $4,000, $5,000 an ounce.
Well, that's certainly the thesis. I would tell you that we are in a 1932-like moment. Remember, I took the Great Depression off the table, but we have to print money until we get out of this jam. Once we got out of the jam, then we can cut back. Do I think that gold could go up? If you have that view that that's what's going to happen, then you absolutely, absolutely, absolutely must buy gold. And my apologies, I've now discovered that we've been invited to Ohio State University, and I got to tell you something. I'm going there, if only for the wings. Okay, there's a Buffalo Wild. Never mind. Nick in Texas. Nick!
Booyah, Jim.
Booyah, Nick.
Hey, I'm wanting to diversify a bit into gold and wanted to see if you can explain the virtues of going with either a company stock like Yamana or something like an ETF fund like GLD.
Okay, I personally think that GLD is right because that's just a tracking stock for gold. Yamana was our favorite. I made a ton of money on it for ActionAlertsPlus.com, my charitable trust. I managed to sell it right, but then it had production problems. One of the things I'm trying to avoid is the individual nature of a production problem or a single mishap. Agnico Eagle missed a quarter and it got crushed even as gold went higher. So I do point out, though, it is the best-run company, and people usually like to hear from me what stock they like and what ETF, so I'm throwing both out at ya. All right, all that glitters is not gold. Think gold is too hot despite what the charts show. That's what I'm saying. I think Agnico Eagle, you ring the register AEM. And you stay with Cramer.
Coming up,